Whenever investors think about investing in equity markets, the one thing that comes to their mind is, can I own shares in blue chip companies? Because historically, blue chip companies have delivered good returns to investors, consistent returns, along with good dividend payments. Now, why people are focusing on large blue chip companies? First of all, as the name suggests, they are very well-known companies. They are market leaders in their products and services. Some of them are global in nature. They lead the category in terms of market share, profitability. Because of their size, these large blue chip companies are able to attract talented manpower consistently, and are able to scale up into new opportunities that are available in an economy. They are also relatively very stable companies with well-established business model. Further, the stocks are highly liquid, widely tracked, and are therefore prone to less negative surprises. Because of these reasons, investors have historically taken an affinity towards buying large cap blue chip companies consistently. In that backdrop, Franklin India Blue Chip Fund offers a very good investment vehicle for investors to invest in the large cap blue chip companies. The fund has a stringent focus on large cap companies, and it doesn't waver from that at any point of time. The clear focus on large cap companies helps the fund to deliver consistent returns during up market, as well as protect the downside on the down market. What is the portfolio strategy of Franklin India Blue Chip? Focus on companies which are large and fundamentally in a strong position in their businesses. The companies that are market leaders in their products and services. The companies which are capable of identifying large economic opportunities that emerge in a country like India and take advantage of those opportunities. The key elements of Franklin India Blue Chip strategy is the portfolio adopts a consistent strategy across market cycles and is not carried away by the market momentum at any point of time. The stringent focus on the fundamentals of a company or a sector in which the company operates in helps the fund to avoid some of the pitfalls of playing momentum in the market. So the key focus therefore continues to remain fundamentals of the company and the sector, and identify inflection points on those fundamentals for the better or for the worse, and take appropriate portfolio actions from time to time. Reading the changes in the industry is therefore a very important element of this particular strategy. Second key element of the strategy is to identify any potential changes in the leadership of a particular sector or an industry. More often than not, the leaders don't remain leaders for a long period of time. So one of the key risk mitigation strategy would be to not only to focus on a leadership company within a sector, but also focus on companies that are in the second, third and fourth rank within a sector, and identify whether they are capable of becoming leaders within those sectors. Sometimes portfolio which is focusing on the second and the third level companies may deliver slightly better returns than the portfolio that owns the leader within the sector. So that is another angle by which we try to create a value addition in this portfolio strategy. The fund, in its long existence of more than 15 years, have been consistent in both its performance as well as its ability to deliver dividends to its investors. Franklin India Blue Chip Fund has an AUM of close to $1 billion at this point of time. But despite the size, we have been able to maintain adequate diversification across sectors as well as across companies. Our exposure to any of these sectors is not excessive and have remained at the maximum of 20 to 22%. Single stock exposures have hardly breached 10% at any point of time. Franklin India Bluechip Fund has been in existence since 1993 and have seen many cycles, both economic as well as market cycles in its existence. The fund has, through its life, has kept clear focus on the large cap strategy. Because of its long track record and consistency across cycles, the fund is suitable for investors who are slightly risk averse, want to stick to well-established names, blue chip names, and avoid the volatility that comes with less established stocks within the market.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.